Hello smart traders, welcome to my channel, and in today's video I'm going to be showing you my easiest and secret ICT trade entry technique that I use in catching a trade like this, and also a trade like this. Now you need to understand that there are so many ways you can enter a trade with the ICT concept, but this very one I'm about to show you right here is the easiest way. So do watch this video to the end in order to get every single gem I'm about to drop deep down inside this video. You know what's going on, guys? This is your boy Mr. Banks. So welcome back to my channel, and if today is the first time you've chanced on my channel, then do what to hit the subscribe button, turn on the notification bell, and give me a thumbs up so that you get notified whenever I drop any more videos like this. So let's get right back to the video after this intro. So guys, so in this video I'm going to be showing you how I'll be able to catch this consistent low risk high reward trades using the 4 major ICT. So without wasting my time, let's dive right back into the video. So the main important thing we are going to do for is market strata is actually the roadmap to the currency market. Actually, the roadmap first need to identify where prices are higher time frame before you'll be able to make trading along them. One thing you never do is to go, as we always say, the trend is your friend. So you need to ride with the trend until the trend is formed in movement. So basically, this is price being in an uptrend. Since we all know, if price is showing series of higher highs and higher lows, that means we're in an uptrend. But where do we take our entries? It's the most important zone that we basically take our entries from. We're showing this on the higher time frame. And then when we go to the smaller time frame, there are other confluence we this before we take an entry. This is typically what I'm about. So the first thing we are going to do is be combining these 5 experience to find a good trading market. So first thing is market structure. Is we identifying if we are in an uptrend or we are in a downtrend. So what we are going to basically do is identify our market structure, which clearly this is telling us that we are in an uptrend because price keeps breaking series of higher highs all the way to we are in an up. What are we going to do? We are going to apply our second rule, timing. Timing is the most important. You will really identify the market structure. If you don't have a good timing, you might end up taking wrong trades premature. You time the market for price to come into your zone or to take your. So the next thing we are going to talk about is premium and discount. So what we are going to do here is, after we identifying our structure, this telling us that we are in an uptrend. What do? We time the market as the pullback happens, and since we are timing the market, we are looking for good trading opportunities to actually take the trade. But we can't just take the trade blindly. Confluence together. That's where we apply our premium and discount. Premium and discount is basically you buying something cheap price and also you selling something at expensive price. So we apply the same concept in the forex market, because you want to buy something very, you want to sell something which is very expensive. So we brought our premium and discount here. The top here is basically our premium channel, and the down here is what our discount channel. And since we are in an uptrend, we are only focused on picking trades from our discount channel. We only want to buy at a very cheaper. So whatever is happening inside this premium channel actually means nothing. It's just price manipulation. This could use into the market for wrong trades. So what we are going to do is we are going to time the market until price comes into our discount level. So as price is coming into our discount level, what do we do next? We identify our point of interest. So our point of interest will be fair value gaps, wake up blocks, order blocks, staging blocks. any kind of confirmation that you use. So we need to identify those levels inside our discount channel. So since we have our fair value gap here inside our discount channel, or our order block inside our discount channel, then we wait for what our end confirmation. So right now we've had our market structure being an uptrend. Our timing is price pulling back into our zone. We've marked our premium and discount to, knowing that we only want to take buy entry from our discount level, and our point of interest, we identify our fair value gap or order block inside our point of interest, and price coming back down. As price is coming down, we're only waiting for smaller time frame to mitigate our point of interest. Then we go to our last option, which is entry confirmation. Right now we've had price mitigate our point of interest. I want an entry confirmation. It's basically smaller time frame realigning with the higher time frame trend. Higher time frame is in an uptrend. Smaller time frame was in a downtrend, and right now smaller time frame has also switched towards uptrend. We will just wait for a confirmation here, then we take our entry all the way to the after price has given us this order flow realignment. This is my favorite part of taking the price. Smaller time frame gives a change in market structure here. Usually you swap liquidity here, and price give us what? A change in market structure right around here. Then we take our entry. So we take our entry from this very low here. We might be having our smaller time frame order blocks here. Take our entry, we set our stop loss below here. We can target our swing highs as our profits. So this is really combining these 4 steps before taking. So let's run back into another example. If price is in a downtrend, so if price is in a downtrend, we see price creating series of lower lows and lower highs. Price creating series of lower lows and lower highs, meaning pricing is in downtrend. So what we are going to do is we are going to focus on how to pick our entry, or how to pinpoint our entry. Price is pulling back into those. So what we are going to do is apply the same concept to be identifying the trend, telling us that we are in a downtrend because we had a change of character or a break of structure to the downside. So we are basically in an uptrend, and price gave what? A change in character to the downside. So right now, what do we look for? We need to identify our structure. This is telling us that we are in a downtrend. We've had this change in market structure here. Our price has actually set right above here. So what do we for? We time the market. Our second point is timing. So we are timing until price pulls back into our zone that we want to take the entry for. Then what's next? We apply our premium and discount to here. So what I was talking about is nobody wants to sell something which is ready, but we only want to sell something which is very expensive. As price is coming up here, we don't want to sell in this discount level, but I want price to come all the way back to this premium level here before we take an entry. That's where we identify what our point of interest inside our premium level. So you might be identifying our order blocks here. Basically, this is where price would actually pull back into before we look forward any end. Timing is retiming that price comes and mitigates our point of interest. So now higher time frame is telling us that we are in a downtrend. Smaller time frame telling us that we are in an uptrend. But price has also mitigated our point of interest. So what do? Do we take the trade? No, because smaller time frame is in an uptrend, and we can't go against, and that's going to be a risk entry. So for an entry confirmation, this is what we wait for. We want the smaller time frame to also realign with the higher time frame. What do I mean by that? Smaller time frame has to also give us what? A change in market structure or order flow realignment, then a pullback, then we take our entry the downside. So this is basically what we are actually looking for. This always happens on the smaller time frame. This order for realignment, price sweep liquidity, market structure shift here. The smaller time frame realigning with the overall higher time frame trend. This always happens on the smaller time frame. Always, before price drops. This happens always before price drops. So without further ado, let's live that example to learn more about this. So guys, this is another entry on GBP AUD using the same entry confirmation. So we identify our trend on the higher time frame. Based on this, we will really see that we are in a strong downtrend, price creating so lower lows, lower highs, pointing all the way to the downside. So here we had already taken a couple of entries here, all the way to the downside until this new week started. Price came all the way up here and broke structure to the downside. Since we had this breakout structure, we need to identify our point of interest. We need to identify our zone and time the market to see where we are actually going to have our entry. So basically, this was the last low which created this high, and this was the last high. We swept liquidity above here. We swept liquidity above here and broke all the way to the downside. At this push, creating an inducement here, pushed all the way to the downside. So we having a structure like this, what we do is we need to identify our break levels. So we had this low here, which price all the way to the downside. So we have our break of market structure here. After that, price pulled back, creating this series of liquidity all the way here. Price came all the way down and broke below this level. The reason why I consider this as an inducement level is when we mark from our high all the way to the swing low here, and actually we know that this is an inducement. So there's a lot of liquidity here, which price would come all the way up here to grab this liquidity. So since we have here, we have our premium level sitting right above here, and our discount level right below here. And on the smaller time frame, we could see price creating series of higher highs and higher lows, pointing to the upside. So this is telling us that our short-term down uptrend is actually bullish. So we wait until we see a change in lower time frame uptrend to the downside, wait for a confirmation, then we enter this trade all the way to the downside. So we actually identify our premium and discount channel that look up from the swing high to the swing low here. We identify our fair value gap. So we have this current fair value gap here, which price has not mitigated this very level here. So we have our fair value gap here. That's our first confluence. Our first confluence is price pushing into our premium channel, where we are looking to take what our sell entries. Our fair value gap here, and right above here, this was the candle which swept liquidity above the size before price pushed all the way to the downside. So we mark that very candle as our order block. So we mark this candle here as our order block or our supply level. The moment we have this, we wait until price taps into any of these, then we wait for a confirmation. So we already know our confirmation is price tapping into the zone, sweeping liquidity above, giving an immediate market structure shift. Then we find our entry inside any fair value gap or order block here. Then we take the trade all the way to the downside. So this is actually the confirmation we are actually looking for. So let's see how price is. Here we have price tapping into our fair value gap and also tapping into our order block. We are still not getting any confirmation yet. So let's wait and see how price reacts to this very level. Price is still ranging around this very level here. So here we see price actually. So let me delete this fair value gap because we already tapped into our extreme supply level. So price has actually swept liquidity above this highs price has actually swept liquidity above the side. So what are we waiting for? We are waiting for a change in market structure. Change in market structure right around here. Then we can pick our entry based on any candlestick confirmation. So right now we have our change of character here. When we push lower to the 5-minute time frame. So on the 5-minute time frame, we have our market structure shift here, or our change of character here. So what do? You go back to the 15-minute time frame, see if there is any fair value gap, because it's not that clear. The 5-minute time frame. So the 15-minute time frame, we have this fair value gap here, sitting right here, and also another order block. So this is a confirmation entry or entry confirmation. We also have another order block sitting right above here. So we have a lot of confidence being put in place to take this. So this is a very high probability trade setup, because we had price come all the way back into our extreme supply level, pushing to the upside, creating series of higher highs and higher lows on the smaller time frame, and price giving us what? A market structure shift, telling us that right now our short-term uptrend is over and price is actually coming to with our higher time frame overall downtrend. So here we take our entry exactly at the consequent encroachment of this fair value gap. Keep our stop loss right above this highs, around 26 pips. Then we target this very low here. This is basically how our entry is going to work. We already had our confirmation here, which is price tapping into our point of interest. Price sweeping liquidity above here and giving us what? An immediate change of character. We pick our entry right around here, then we target this structure low. So let's see how price moves. So here we have price come all the way up here, tap into our fair value gap, push all the way deep into our order block. And right now we see price pushing lower. So let's see how price moves. Here we had price approaching our take profit level, pushed all the way up again, and now price finally hits our take profit. So this is basically telling us that our 4 major rules of picking a confirmed entry actually works, and this is how you can use this to also pick an entry and also get a higher probability win, where this trade actually give us a 1:5 risk to reward. When price actually grab liquidity above here, I sweep down for time quantity, and then to the next thing I'm looking for sell entry. Price waiting another right above here in swap liquidity and time frame here. Give me another confirmation. Price is actually good. Then before I'll be able to take any kind of thing, I need to see price give me what 50 after structure. This is the only way I'll be able to, and the price is actually coming all the way down. Feel this imbalance right here, and even drop right below here. So right now I have my second. My first confirmation was this liquidity drop. Let's say liquidity here. My second confirmation the market down. My third confirmation is for what means for. That's my thing. So what do we do? Take our moment discount to just from the swing high to the swing low here. Price. So right now we have this moment discount to here. from this swing high to this swing low, what do we look for? This right here is our this was our premium channel. So I'm only waiting to take what sell entry of inside this. What do we do next? After we've been able to identify our premium and discount channel, and now let's look for what our points for what happens of interest. Clearly see this fair value gap sitting right here, and fair value gap sitting inside premium channel. We also had another fair value gap sitting right here. And this fair value gap was inside our discount channel. You can't sell anything which is red. We want to buy something which is discount, and we sell something which is red. So I actually ignored this very fair value gap here. So this wasn't what I intended doing was to pick my entry of this fair value gap here, right above here, and targeting whole fair value gap or this whole balance here. Even better still, target this liquidity and right below these levels. Realize there was a lot of liquidity here to the graph. We have the first generating liquidity here, right here. My entry was my stop loss, and always one important to take note: you always know where to place your S. The stop loss needs to be where price or market becomes. Yeah, I know if price moves above this, stop loss right above here, which is base. We got it for 197. Price actually came all the way up here, up into my entry, started to shoot all the way down. Then we see price creating another series of internal range liquidity here, which is this fair value gap. That price came at price all the way to the downside. So this is the first example how we pick our entry based on timing our entry. We pick our market structure shifts. Liquidity graph where we pick our feed to identify here and target this swing high. I actually wanted to target this swing high, but then that range was very far, so I had to target this swing levels here. These are all external range liquidity here. Price all the way. Like when price tap onto my or price tap into my daily order block, expecting price to push all the way up, tapping all those. When price targets on internal range liquidity, the next range we are heading towards is the external range liquidity. At this level 4, waiting to target those levels as my big profit level. So basically, when price came all the way down to my daily order block, what I had to do first identify my liquidity. Price give me this here. Let's wait for our liquidity here or the big structure. Then just after that, price will actually break above this lower high here, which was the break of this low here. That's what a confirmed market structure shift before we will take our entry. This is basically what our trading plan is. First thing we are looking for is timing the market. Next thing is price should grab liquidity. After getting into our point of interest, and after that we looking for the market strata sheet, then find our point of interest, either being a fair value gap or a breaker block, one order block, or any movement or a retracement to our trade, which is golden levels. So these are the things we are going to consider for timing the market price as start looking what our daily block here. Our price is still in a downtrend on the lower time frame. Price is still showing a series of lower lows, lower highs. So we can't just sell blindly just like that. So we need more confirmation. When price tap into our daily order block here, price grab this liquidity here, and also there's a lot of liquidity resting right below here. Price grab this liquidity, tap into our daily. So let's see what happened next. Price gave us this nice market structure shift. The upside. Right now we have our second confirmation. Price giving us what a market to the upside. What do we do next? We wait until we see price, then we identify our premium discount channel. So this is a premium and discount here. So when we are looking for sell opportunities, sell from premium level. When we are looking for discount, so here we have our discount level here. Then we have what our premium level here. We are going to ignore any kind of movement that happens here. Then we only want to take them from so after identifying our premium and discount level, what do we do next? We look for what our point of interest inside our discount level. Our point of interest. The first thing we are going to identify, use our Fibonacci to identify what our holding zone. So from the swing low to the swing high here, we have this to be our swing or our holding. That's a 60% or 0.6%. So I love the when price pulls all the way back into those levels, I'm very confident in we have our Fibonacci tool giving us this nice holding. And again, if you look clearly, you can also see this nice fair value gap aligns with our fib. Have this fair value gap here, and at the same time, looking for the last bearish candle, which and that's this very candle. Our right now we have all our criteria set. Where do we put our stop loss? So that's the most stop loss needs to be at where price or market becomes value. Price needs to here I don't mind picking our entry from have our fair value gap aligning with our Fibonacci somewhere above our 0.10 level here. Our stop loss has to be below the last bearish candle. Then we can target all this level setting right above. Is basically taking when price comes all the way down here, depending on that, when price taps in, you can influence what price comes all the way down here, price taps into our zone, and then take all the way up, hitting our profit right above. So this trade also give us 185 base reward. We have our first opportunity that we the extreme liquidity level but the swing average target is right above. That's if you're a swing trader, you can still log the trade the target for when it's best actually want to get all the way up to level. Yeah, it's the same concept that we have. But as I explained in our first example, when price is in an uptrend, we are only focused on taking time of buy from our higher lows, and we target for higher highs, we target for higher lows, target for higher price gain all the way up here. So right here, I knew price up into higher time frame. That was a daily time frame liquidity. So that's basically this very level that I had here. So when price up, I realized we are going to have what? But after grabbing a daily price, I actually started selling all the way back to the downside. And then what do we do here? Because already price was uptrend, taking series of higher highs and higher lows. So I was only waiting if price give me a change in market structure. So price must break below this low here, give me and market structure start looking for that opportunity. But they are still buying this. The price did give me this market strategy. I was actually looking for downtrend to see coverage. That is up to our ending the downside. So this is basically what we are doing. The price has actually tapping our point of view. So this is exactly where we got our change in market structure. So you see price came all the way up here. So let's go to our 5 minute time frame. So yeah, very clearly. On a 5 minute time frame, we see price having top of the first, but then we had our liquidity here and also our market structure right below there. Right now, this is all we were tries to do as this type of tapping drop. Catch it, that's selling for the right now we have our machines or let's see our pullback is actually good and here. So let's actually mark our point of view. We also have this bubble right here. The price might mitigate that very level. So there's also a fair value gap resting right about that right touch. Here we fix our entry actually about this fair value gap here. Right about our price, then we target this very low here. And if price gives us more movement, we will then go all the way down and target our swing levels. Here we see price coming all the way down here, price tapping a very nice movement. So let's use that to target our swing levels. Here we see price coming all the way down here. This was a very clear and nice entry. We actually picked in our entry. Focus it down to our point of rest. This was liquidity market structure. After that, we look for a point of interest, taking a fair value gap and for top loss, let our top loss be very sweet. But then if you actually wanted to take more tips on this particular about our swing levels right below here, price was actually all the way in. Here we see price come all the way up into this very levels. So without wasting my time, let's on identifying more opportunities.